Morning, guys. It's Thursday, September 18th, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures up 1/4 cent at 4.27. November soybeans down 4 at 10.39 3/4. December Chicago wheat up 2 1/4 at 5.30 1/2. December Kansas City wheat up 1 at 5.17 1/4. December spring wheat unchanged at 5.74. We got some more farm payment news to start off this morning. Let's go there.
So, Republican farm state lawmakers are urging the Trump administration to provide additional economic aid for U.S. farmers. Officials are weighing a package similar to the $23 billion in payments issued during Trump's first term. Earlier this week, USDA Secretary Brooke Rollins said that the agency is considering additional assistance but has not set a timeline or funding amount. The government is already expected to distribute over $40 billion in aid to farmers this year, the second highest total since 1933. Looking ahead, net farm income could drop by more than $30 billion next year as government payments decline and the markets continue to struggle.
Yes, farm payments this year will be about $40 billion. And to be very clear for the tourists on the channel who don't watch us every day, farm payments occur all the time. They happen under both types of administrations. They happen under red administrations and under blue administrations. As a matter of fact, almost all of the $40 billion that will be distributed to farmers this year or has been distributed was approved last year under the Biden administration. And I understand that little comment and fact will not stop the commenters from doing their thing, but I just wanted to throw it out there. The problem, of course, as I've discussed in the past, it predates the Trump administration. It has a lot to do with the problems in farm country have a lot to do with increased production cost. And we've shown this graphic 3 or 4 times. It's absolutely fantastic from National Corn Growers. The cost of production for corn, soybeans, other crops has just skyrocketed. And it really, the big transition year was 2021 to 2022. That's when we saw the big increase in production cost. And that's why they had to do ECAP last year. The payments that were approved late in 2024 and are being sent out now, that had nothing to do with trade wars. That was just because the farm economy sucks. And that's really the bigger picture here. Yeah, Trump's trade war with China has absolutely hurt the soybean market in particular, and it's hurt exports. But that's not the only thing that's going on here. It's one of many, many things that are going on here. So I think that as we move forward here, I think that some sort of payment program being approved this fall is an inevitability. The question for me is this: is it going to look like MFP? MFP was very much crop specific. So the big payments went to soybeans and sorghum because those were the crops that were impacted by lack of Chinese buying due to the trade war. During MFP in 2018, soybean growers got $1.65 per bushel and then $2.05 per bushel in the second go around, whereas corn producers, by comparison, got a penny per bushel the first go around and 14 cents per bushel in the second go around. Sorghum was big, 86 cents the first go around, $1.69 the second go around. The other way that they could do it is more like an ECAP, which is the one that's being distributed now. And this was more broad-based across every crop. It's just, hey, the farm economy in general is terrible, and we're going to send out payments for everything. Personally, I as I mentioned before, I don't like or love any of this. But if they told me, Joe, you've got to put the program together, how's it going to look? I would make it look more like ECAP because of my contention that the farm economy and its problems have a lot more to do with things other than the trade war. The trade war is part of it, but the farm economy's problems predate this current trade war and for a number of different reasons. So it is Republican lawmakers pushing for this. There's probably a few Democrats. It's more so like farm state lawmakers. But in any case, I think it's coming. It's an area of contention. Again, we've talked about how some farmers like it, some farmers don't, but that's the story this morning.
The Federal Reserve lowered interest rates yesterday for the first time since December with a 1/4 point cut, bringing the federal funds rate to a range of 4 to 4.25%. Policymakers highlighted the weakening labor market as the primary reason for the cut, despite inflation remaining above the 2% target. Job growth has slowed sharply, with only 22,000 jobs added in August and unemployment rising to 4.3%. The Fed indicated it will prioritize labor market concerns over inflation in the near term. Officials also signaled expectations for 2 additional rate cuts this year and 1 more in 2026.
As I mentioned yesterday, the Fed has a dual mandate. It's basically labor and price stability, which is inflation. They feel as if inflation is tamed. Now they're worried about the labor market, so they're cutting rates. If you look at the dot plot, yeah, they're going to cut another 1 or 2 times this year. The next meeting is October 29th, and the Treasury markets would indicate that there's almost a 90% chance of another quarter point hike on October 29th based on Treasury markets. Again, the 10-year Treasury yield actually went up yesterday, so a lot of this was priced in, but it's been a fairly, I don't know what kind of range that is historically, but 3.86% up to 4.8% has been the range in the 10-year Treasury this year. But really, it's been tighter than that. It was kind of that April spike low and then big rally, and the highs in that yield were posted very early in the year. So we have been falling off in terms of interest rates, which for our crowd here is a good thing. I just don't know that it's going to impact your operating lines a whole lot. So Fed's cutting. It was not a surprise, and they're probably going to cut again.
Russia is taking steps to boost wheat exports after a slow start to the season. Russian officials have met with major grain exporters to discuss ways to improve shipments, including a proposal to subsidize rail transport to ports, as high domestic prices and export taxes have cut into overseas sales. Wheat exports during the first 2 months of the season were down 40% from last year. The USDA projects Russia's wheat exports at 45 million metric tons this season. That's about 5% higher than last year, but nearly 19% below the 23-24 season. Meanwhile, India's wheat inventories have climbed to 33.3 million metric tons, a 4-year high, as the government has increased purchases from the nation's farmers.
This all appears to be bearish news with regard to wheat prices, and wheat prices are very poor. Bottom of the barrel, haven't been able to rally. That being said, a demand for U.S. wheat on the export market is phenomenal. We've got the best book of export sales of the last 10 years, and demand prospects look decent right now. It's just that we're oversupplied. You can say the same thing about corn. We've got the best book of export sales on record in corn, but we're still oversupplied. Put that in quotes because a lot of that is contingent on how big this year's U.S. corn crop will be.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Brian Split was on yesterday, ran charts. He's the best in the business at doing this. The chart videos are super interesting to me. There's a lot of context that we don't ever talk about here in the podcast because the technical side of the market is totally different than the fundamental side of the market. I did a corn rundown on Tuesday, ran a whole bunch of stocks to use ratio charts, a whole bunch of different looks at the corn supply and demand situation, domestically, globally, picked out key exporters, key importers, pretty cool stuff. It was an educational piece for me. Chris Barron was on talking about farm budgets on Monday. It's the worst he's ever seen. And again, he made the caveat that he wasn't doing farm budgets in the 80s, but it's pretty bad. I saw the numbers, and he made a PDF download of his aggregate budget set available, which was super interesting. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation, nobody will try to sell you anything else. In today's premium video, I'm going to do corn and soybean marketing, what I've advised, what I'm planning to advise, what the game plan is moving forward. If you're seeking a simpler approach to your grain marketing this year, this is something you should check out. I take the most simple and most transparent approach that I'm aware of is available in this industry that you'll ever see. So if you want to see that deal, it'll be out at 10 a.m. Central Time this morning.
Canadian wheat and canola production are projected to rise this year. According to Statistics Canada, total wheat production is forecast to increase 1.9% from last year to 36.6 million metric tons, the largest crop since 2013. Canola production is expected to climb 4.1% to 20 million metric tons, the largest crop since 2018. Wheat futures remain under pressure from abundant global supplies, particularly from the Black Sea region.
Here's a chart of Canadian wheat and canola production or rapeseed production. Actually, I learned something this morning, and I don't know much about what goes on in Canada with regard to production, but canola is a subset of rapeseed. So the way USDA tracks it, it's all tracked under rapeseed, but there could be some other rapeseeds out there that are not necessarily canola, but the canola product, I think it's like 99% of it is canola. In any case, Canada is a fairly big deal with regard to wheat, 4.4% of global wheat production. There's just a lot of wheat producers, but they are the top rapeseed producer or canola producer, I suppose. And they've had problems with both of these markets. The wheat market sucks, just like it does here in the United States. In canola, they've had some trade war issues with China.
U.S. ethanol production declined last week. Weekly output fell to 1.06 million barrels per day, down 4.5% compared to the prior week and down 2.3% versus the same week last year. Ethanol stocks also declined, dropping to 22.6 million barrels. The print was down 1% compared to the previous week and down 4.7% compared to the same week last year. Although they have declined since the start of the month, U.S. ethanol margins remain strong.
Production is good. Here's stocks, which are declining, and that's good. And here's production, which is good. So we're running, I think, a percentage point or two above last year's pace. A couple weeks into the marketing year, USDA is projecting that corn demand via ethanol in the United States is going to increase by 3% this year versus last year. And some people might argue that that projection is a little bit lofty and that USDA is a little bit too high in demand. But time will tell. We'll see what the production numbers look like moving forward. What did cattle do yesterday?
Cattle futures were lower. Live cattle were 217 to 277 lower. Feeders saw losses ranging from 330 down to 562. Box beef prices were also lower. Choice was down 444 at 388.18 and select was down 680 at 366.37.
Dow Jones is up 300 this morning. The S&P 500 is up 52 points into fresh all-time highs on the futures. Stock market really likes the rate cuts, I guess. Bonds or treasuries are up just a little bit. U.S. dollars about flat. Crude oil is down 8 cents in the October WTI at 63.97. Have a great day, guys. We'll be back on Friday.